Hey guys, welcome to this video. Thanks for joining me. Now in this video, I'll be talking about the latest earnings report from General Electric. So if you're new on my channel and if you're interested in subjects like this, especially looking into different stocks and their performances, you can always subscribe to the channel by hitting that red button below. And also, if you find value in this video, please don't forget to hit the thumbs up and also leave your thoughts in the comment section about General Electric, especially if you have invested in this company. Now, we all know that we're looking forward to a better performance from the company. We all know that they made a huge loss this quarter that just passed, but we all know the reasons behind that. And I hope that by looking into the details, you're better informed about what is going on with the company and how the company plans to turn things around. First thing we want to start with is to start with the General Electric's balance sheet. Now, right now, we have the assets column. And as you can see, all right, we have from Q3 2019, Q4 2019, Q1 2020, and then Q2 2020. Let's start with the cash and short-term investments. Now, as we can see that General Electric, here they had about 27 billion and 36, 47. And then we had a slight decrease by the end of June, all right? It's now about $41 billion. The other thing also that we also want to pay attention to is total receivables, all right? As we can see, that number has remained consistent overall. As you can see, it was 16, and here it stayed at 16 all through. Here now it's about $16 billion, even by the end of the quarter. Total inventory has remained relatively stable, and that is very important, even though every organization or every company should always look forward to minimizing how much of inventory they hold. But considering the situation that we are all in due to the pandemic, I believe this is showing a stable company. Let's move on to the total current assets. And under that, we can see the total assets here has also remained relatively stable. However, it decreased by the end of quarter of about $256 billion. Now, is that something of concern? Maybe we can look a little deeper, all right? As you can see, under the property, plant, and equipment, that is relatively stable as well. Here, the goodwill, intangibles, long-term investments, and here is something that we should all pay attention to. But again, it's still relatively close. I don't think it should be something of concern for an investor. But one of the areas that often bothers any investor is the liabilities. And as we can see under liabilities, the total liabilities relatively decreased, all right, but it's still a huge amount of debt, and that is not good. Now, as you can see here, the total debt, 93, 90, 85, 81. And that is exactly the direction we want to see the total debt go. And same thing with the total liabilities, 235, 237, 226, 222. Went up a little bit on this side, but then came down and then went down even further. And that is good. Now, obviously, every company, any organization will often want to operate on debt so that they can keep more cash in their pockets until it's really needed. But in a situation like this, I believe that GE was in a lot of debt, and they've been trying to re-strategize and restructure their portfolio of investments so that they can actually turn to a profitable company like they used to. And I believe that is what is really going on with this debt being reduced over time. Now, we know that with the current situation of the economy, it might be very hard for them to get back to where they need to be. But the good thing is they're working in that direction. And that's all I believe we should really pay attention to, especially if you're a long-term investor. If you're looking for a long-term investment, then I still believe that GE can turn things around. And I'm going to share some of my reasons with you after we complete the balance sheet here. Let's go to total equity under the shareholder equity. We have total equity, and as you can see, that has increased relatively steadily, all right? Like it's 27, 28, 35, 33. So, I mean, went down a little bit, but again, it's still relatively stable. And let's see, retained earnings is another one I try to look at. 87, 87, 93, 91. So that means, they are still able to keep more earnings rather than, pay off debt, even though they still have a lot of debt, but they're still able to keep more of their earnings, in the company. Now, one of the reasons why I believe GE is still a company for a long-term investor is because you got to remember that GE is a diversified company. Even though they've been restructuring some of their investments and they've sold their lighting company, and the plan was so that they could focus more on the things that they're good at, which is something that I believe any reasonable person would do. If you're good at something, you get rid of the ones that you're not really good at and focus on the ones you're good at so that you can make things profitable. Now, according to their last the report, the second quarter, 2020 results for the Q2, and we went over the same thing as we just went over, but according to the statements, all right, so the company's servant systems, right? It's GE Lighting was sold to servant systems for, a huge amount of money. And again, that's one of the reasons why I believe they're able to keep more cash at hand. You can see they reduced their debt by 9.1 billion year to date. That's a lot. And that I believe is a good thing. They reduced near-term liquidity needs by 10.5. All right. Realized more than 1/3 of cost and cash actions. As you can see, under the power sector of GE, it was a loss, okay, but 1% loss in the 3 months, which ended in July, but then in 6 months, the beginning of the year, pretty much, it's about 2.1, and year over year, as you can see, last year was 2.5, but now it's 2.1. Renewable energy, all right, last year, lost this year so far, and it's even a wider loss. In the aviation, remember last year was 19.2, and so far this year is just 2.9, and the 3 months reach period is about 15.5% loss compared to the 3 months last year, which was 17.6%. Healthcare, it's been profitable, and we can understand why that is. Again, goes back to the reasons of the whole pandemic and how that, that's how although it says here orders of 4.2 billion were down, 10% reported, and down 1% organically, driven by lower demand for products, less correlated with COVID-19, and lower volume in pharmaceutical diagnostics, partially offset by elevated demand for COVID-19 related products. So obviously the healthcare region is doing fairly well. But then the GE Capital, obviously lost again. This really emphasizes, again, the need as an investor to be diversified. If you put all your eggs in one basket, you will run into situations like this. But let's go to the income statement of GE. And as you can see, the revenue, all right, was down 23, 26, 2017. Operating expenses went a lot higher than expected, but again, it's still comparable to the periods when things were normal. This region, as you can see, was due to what it says here, unusual expense. So I guess that's why this overall was lower. As you can see, it's still trending in the same light as a normal environment, as a normal running economy. And one other thing I would like to mention is the income before taxes. Here, it was a loss, and then it was profitable, and then it made more profit here. But again, and I think I covered this in the last GE video that I made about the fact that you are able to carry over certain expenses or certain losses in the past, which can be used to offset your taxes in the current year. So I believe that is exactly what has been happening here. But then you can see here is a huge loss this time around again. Is that a good thing? Of course, it's not a good thing. It all depends on how the company survives through this period. If it declares bankruptcy or something, then everything is going to be written off. But if the company continues to operate and they're able to keep more of cash and somehow become profitable, they can write off more of these losses and save more money in the long term, which means more profit in the long term. Income after tax, obviously, is that amount. Again, a loss. There's nothing to really talk about it. The net income, all right, over time, here was a huge loss, but then it became profitable, and then profitable here, and then now it's about 1.9, almost $2 billion loss, all right? But the last thing that I also look at is cash flow, all right? And the interesting thing is G did well. Net income, as you can see, previously in the previous quarters. And then here it was about 4.1. So, and that's one of the things they actually mentioned in the statement. If I go to the statement, it says it here. It says it realized more than 1/3 of cost and cash actions in the second quarter toward target of more than 2 billion of cost actions and more than 3 billion of cash actions during 2020. That's something that is really good. Let's see here. And you can see it says total cash from operations. Obviously, they didn't make much money, so it was a loss that term. But total cash from investing, somehow they've been doing well with that, so that's good. See, sale of business, 20.8 billion. And that's something that a sale of fixed assets, another 1 billion. All right. But one thing that concerns me about GE, obviously they're trying to restructure, so they're not making much acquisition of other businesses. But in times like this, obviously they don't have enough money compared to the amount of debt they still hold. They don't have a lot of money at hand. So I don't think they can make as much investments as they would like other tech companies are doing. But I hope that they're able to restructure things around and bring this company around. I mean, I'm still believing that in a well-balanced portfolio, that you're not overly invested in this kind of company, long-term, I still believe in a company like this. And that's it, guys. I hope that you found some value in this video, and I hope that you watched up until the end. So if you have, please give this video a thumbs up. And if you haven't subscribed to the channel, please consider subscribing to the channel. It definitely helps me, and definitely helps me to know that I'm doing something right. If you have any thoughts or questions, leave in the comment section below. If you have something to share about GE that you know, also leave in the comment section below as well. I would really appreciate it, and I'll see you in my next video.